Investors, I am by no means a war dog, but I certainly stand with Uncle Sam when it comes to Lockheed Martin, ticker symbol LMT, which has become one of my favorite dividend stocks as a dividend investor, especially as it's trading for just $420.66 per share. That's up by 43% over the last 5 years, yet down year to date by 10.16% thanks to our economic backdrop and the necessity for their clients like the US government to shift their funds elsewhere. But investors, that then means that there's opportunity for us longer term investors. Now today, I want to keep it simple and answer the question of whether or not it's time to double down on Lockheed Martin and score more shares worth of it, or at minimum, pick up a few shares with what you got to spend on it. Now on top of that, I also want to make the case for Lockheed Martin and why it remains a go-to holding in my portfolio that I can never really get enough of as a dividend investor. But before we dive into all of that, if you're new here, I'm Ari, a dividend investor here on YouTube, looking to share all the economic insights and new dividend stock ideas that you're going to need video by video to help you drive more dividend passive income. With that, let's dive right in. So as I shared, Lockheed Martin is currently trading for roughly $420 per share, meaning it's down by 10.16% year to date, which has sounded the buy alarm for me as I recognize the sheer profitability of getting invested into Lockheed Martin at lower lows. Of course, we all have to love the green days and they're super exciting, but when stocks like this are in the red, at least for me, I am thrilled to have a discount opportunity in front of me. Now, let's get on the same page when it comes to Lockheed Martin as a dividend stock pick, because I get it, it's not necessarily yielding a 10+% dividend yield, yet it has been paying dividends to shareholders since 1989. Now that's a solid 34-year history and reliability for investors. And for those of you asking, no, they are not a dividend aristocrat, yet they've been rewarding their shareholders through dividends differently depending on economic environments and to the benefit of their balance sheet, which I can appreciate far more than a company that is negligently paying dividends or cuts a dividend by surprise to their investors. Now, as of this video, we can see that Lockheed's dividend yield is sitting at 2.84% according to TipRank's data, equating to a cool $3 per share owned. And heading over to Seeking Alpha, we can actually see that Lockheed has 20 years worth of dividend growth, along with a nice growth rate here of 8.45%, which are all healthy looking metrics to me as a dividend investor, which keeps Lockheed on my list for times like now, as the company's share price continues to slide. Now, before I go any further, I do want to know if this video or videos like it are of value to you in terms of content. So go ahead, tap on that thumbs up button to let me know at any time, which will ultimately, again, just help me continue to make content like this and knowing it's what you're looking for. But now let's get deeper into Lockheed Martin's overall health by diving into their financials a little bit here. Whereas we can find a rather clean balance sheet with their total assets coming in at roughly $52.88 billion, and as for their liabilities, just north of $43 billion. Now that's a cool difference of a financial cushion of $9.88 billion, meaning should things get a little rockier for the Lockheed team, their bases can be shored up. But honestly, there's way more to it than just that, in which we'd really have to come to understand Lockheed's business inside and out, from what they do to whom exactly they're working with, who comprises of their book of business. So let's quickly jump to Lockheed's website to ultimately discover the first thing here is first, and note their leadership in the industry, which they're abundantly clear on. Now, in their words, they're here to define the next generation. And in my words, it's pretty simple. They're literally the world's leader when it comes to being a defense contractor. And as you can see with all things fighter jets, missiles, and other toys that we aren't really all going to be in the market for. At least I'm not. But let's first get to it with a better picture here of Lockheed Martin.
Protecting what matters most is the mission that matters most. At Lockheed Martin, we know today's battlefront is behind, above, and below. So no matter where the threat comes from, we make sure you stay ahead of it. Out here, we understand that every piece of the all-domain puzzle must fit together perfectly so that you can defend our shared values and own the contested battle space. We're integrating digital engineering, AI, and 5G technology into the field and within our own walls. Everything we do is in service of what you do and why you do it. Your mission is a safer, more secure world. Our promise is to help make it happen by connecting the software to the hardware to everywhere, ensuring those we serve always stay ahead of ready.
Now, investors, I don't know about you, but that just gets me going. A business that I want to be a part of, especially when I come to understand that their largest client is the United States government. Good old Uncle Sam. And you know what? Uncle Sam is always upping the ante on the wartime arsenal, meaning Lockheed has created a very nice moat for itself with such clients and all the allies of the United States. That leads to deals like their recent $315 million modification deal for the US Navy, or another recent $606 million deal, or how about a $2.7 billion mod deal, again with the US Navy, which I know are all timely projects, but this ultimately means that Lockheed isn't going to go and close up shop anytime soon or disappear tomorrow. But I will say, to get real with you, they do face tough times right now, and we can see that with their delivery schedule that's been thrown off a bit, but at no fault of their own. Investors, we are still dealing with economic pains like supply chain matters, which have certainly impacted Lockheed's bottom line, both production and sales. But there's a really strong buy indicator when it comes to Lockheed Martin right now. If you catch this, if we dive into recent buys from smart money and Lockheed insiders, they are buying more and more of Lockheed Martin shares. And it's interesting to note that the insiders here, like the COO himself, July 31st, and none other than the CEO himself buying $2.2 million worth. So where do I stand? Well, in a word or three, I'm bullish. And so too are analysts, with almost 20% worth of upside expected, coming to a target share price of $503.13 per share. But now I'd love to know your thoughts on Lockheed Martin, if you think it's a buy, if you're gonna be buying in, or your overall thoughts on defense contractors, because many of them are down right now, at least year to date. So be sure to comment down below, let me know your thoughts, and if you enjoyed this video, you're gonna love this one right here. Before you click away, make sure you tap on that thumbs up button for me, and of course subscribe to never miss a single video.